Introduce Noelle Wheeler. Thank you very much, Noelle, for showing up. She is going to give you guys a lot of good information on Lindy here, and she's already working with some of the people in here, so thank you so much for being here.
Well, I want to thank Dan, in particular, genius, and just a nice guy, and all of you guys for being here, and I get other stuff to do. So I want to start off telling you a little bit about myself. The reason is, this is such a relationship-based type of business and industry. With the internet, things are so anonymous and impersonal, and I think relationships are making a comeback. They're important, and you're seeing that through all the social media. It means a lot, and this is how we can connect and reach out through the monitor and touch people. So I think it just tells you relationships are important, and relationships are based on knowing people. So I just want to, if you'll indulge me, tell you a little bit about myself. I am originally from Canada. I don't know if there's any other connects out there, but I'm from Toronto. Graduated and came here in 1990, and I had studied architecture in Toronto, and I don't know if you guys remember 1990 wasn't the best year, the economy and all that, so my architecture degree from what university? Everybody was saying here in California, and you're a woman and you want to be in the construction industry. No, honey, I don't think I have a job for you. So I was kind of seeing what else there was out there for me. So I did, I looked into getting my real estate license because I had it in Canada. So I thought, let me get it here. So I got my real estate license, and then it occurred to me that that's not really my cup of tea, selling real estate. Everybody's good at something, and that's not what I was good at. So, but in California, a real estate license is the same license to do loans. Now there's a new endorsement added to that, but at the time, that's all you needed. So I thought, let me just do loans, let me try that. And so I had no experience in loans, and I thought, well, how do I get experience? So I started calling up different mortgage companies, and I just looked in the yellow pages under M for mortgage, and I started at like ABC Mortgage, and I just was like, hello, I have a degree, and I want a job, and hello? And so I just kept calling and dialing for dollars, and I was over being humiliated, and then by L for Loan Network, I got a job, and the guy's like, you got a degree, honey, you can do this. I'm like, okay, honey, fine, whatever, I can do this, that's fine. So I basically started off as a loan processor. I didn't even know what that was. But basically, it's putting a loan together. It was a really good experience. And so that was the back in the day of non-computers. I don't know if anybody, I think everybody remembers that here. Sorry. Sorry. Except for Dan. So that was back in the day of typewriters. Everyone? Okay. Back in the day of typewriters, so you put your little 1003 in there, and then you type, and it's an official document, so if you made a mistake on this 4-page document, and then you start again. And like this it was a different industry than it is now, because now you're just like clicking in some numbers and pushing print, and 30 pages comes out. So it's pretty different. It was a good experience for me. I think like any industry, if you're going to do something, you need to do it well. Otherwise, you're probably not going to do very well in it. And so it was a really good background for me. I did that for a few years. Then I had the opportunity to do underwriting. Some girlfriends were doing it, and it was all about underwriting, as you know, is all about guidelines. What is the max loan amount? What's the max debt ratio? What's the max this, what's the least that. It's just guidelines, guidelines, guidelines. So I just learned all my guidelines. It's like, yeah, I can underwrite. So I was able to do that. I don't know, I work for this little company, I don't know if anybody has ever heard of it, it's called Dytech. I don't know if any of you have heard of it, but they're ginormous, and so I underwrote with them, and I underwrote for a lot of different companies, and it was really great because as a contract underwriter, I got to have experience rather than being an employee and staying at one place. As a contract underwriter, I worked in a lot of different places, learned a lot of different things, so that was really a good experience for me. So then, when I was expecting my first child, I quit my day job and went home, and that was a nice opportunity for me. I think a lot of women, not enough women, take that opportunity to do something in addition to having your babies and all that. I mean, this is just, okay, all you guys just plug your, this is all for the women. It's just to pump up all the girls out there and your daughters. I think it was a nice opportunity, and I kind of grabbed it to do something more. So I wanted to start a business, and it's really hard to do that. My husband was in school, and so I took the opportunity to basically use the nursery as my office as well, and I basically had the baby on my lap and the computer, and I started a company. So I started Nationwide Mortgage. That was 15 years ago. Yeah. So that was my start, and so it's been a bumpy ride, but still here, so it says something. All right, so what is this all about? This is a comparison of conventional, subprime, and hard money loans. What's the point of this? Just a lot of numbers. It's kind of teeny-weeny, and everybody has a piece of paper there. I made it teeny-weeny on purpose so you look at the piece of paper and then take it down for you. But there's some really neat things on here, I think. I wanted you guys to also have a tool that's useful for you, and useful like if you have borrowers or if you're an investor, you know, because a lot of people say, I need a loan, what's the rate? Okay, well, I'm gonna buy a house, what do I have to put down? I'm like, well, and you know, there's a lot of difference. Okay, so loan to value, obviously that's the down payment, or the amount that's in the loan, or the down payment if you're gonna purchase, or the equity if you're refinancing. So we're talking about anything from 3%. Does anybody know what the 97% loan is? I bet somebody here knows what that is. Where do you get a 97% loan on this planet? Anyone? Anyone?
FHA.
Yay! Very good. Yes, FHA. FHA, as you know, is there to help us when we need help. It's not the best program. It's not the best rate. The fees are very high. Recently they've been increased, and I don't want to say the rates suck, but it's more expensive, and you have a monthly MI. And ideally, if you could put a little bit more down and not have the mortgage insurance, what we call MI, it would be better. So anyway, you can put 3% down, for example, and everything over to hard money is all dependent on all this different stuff, right? So what do you notice? A couple trends. You notice the trend in rates from conventional to hard money. Now that's a big difference. 3 to 5% in a conventional loan, up to 14%. I didn't want to scare people, but you know, the hard money loans, kind of anything goes. In this industry, we're usually, the products that we're doing typically are in the, now this is the whole industry-wide, but there are higher rates in hard money. And I'll tell you why. You know, some people say, oh, loan sharking, how can you have unlimited interest rates? There is a wall here. I don't know if you can see it, but there's a solid wall, and it's completely different, this world, the hard money compared to the subprime and conventional. And the reason is, this is consumer purpose, and then this is business purpose. So what does that mean? Well, it means a lot to mortgage people because the rules are completely different. Consumer purpose loans, CFPB, anyone? I'm sure you've heard that.
I don't know anything about, I don't know what Harmony is, or
Okay,
FHA,
well-
or subprime, so I'm kind of 101.
Okay, awesome. So this is perfect because a lot of people aren't sure what, they'll say, well, what kind of loan can I get? And I think it's important because if you are not sure what kind of loan you could get, you could look through this and literally see, okay, what is my FICO? Okay, I know it ain't this. Okay, so maybe it's that, do you have mortgage rates? Do you have a bankruptcy? Do you have them in 3 years, 1 year? So you can kind of see where you're going to fall. So if you basically fall in one of these, you're not going to go this way, okay? So if you want this kind of rate, you're going to need this kind of score. You can't have mortgage rates, you can't have bankruptcy. So that's the way you would look at it. You can see what category you're in. But there's a big difference in our industry between business purpose and consumer loans. And I think the amount of information that different people have out there depends, you know. Some people are really familiar with all the terminology, and some people, you know, loan to value, different things. These terms can be kind of tricky, but so that will give you, it's a bit of a cheat sheet, and if you have questions about it, then you can call me. Our company has all of these programs. The thing that most hard money lenders have is hard money. And if they have private or hard money, they usually don't have subprime or conventional. But if somebody has conventional loans, they may have subprime, they don't usually have hard money. So usually you're dealing with the hard money guy, the conventional guy. Everybody forgot about subprime because it's a dirty word and none of them want to do it or use it, but it's not. There's a need for it, and it's useful. So we offer all of it. And so that's a good thing. It's kind of fitting the borrower to the program that's best for them, the rate that's best for them. And I'm telling you, I've had people that come to me and say, hey, I need a hard money loan because I have this problem. And I'm like, okay, let's not assume anything. Let's see the whole picture. No, I don't want to tell you my credit score. I had this problem. Well, let's just look at the whole picture. And you look at the whole picture and it's like, you know what? Yeah, you had some issues, but we can put you in a subprime for now, 1 year loan, or 2 years, you get your stuff together, and then we can move you on into maybe a better loan. So I think it's important to understand the different categories, and it is kind of a bonus that we can work fluidly, and our relationships with our borrowers are huge. It's super important. You know, it just means a lot to me. Some of the young couples I've worked with, some of the women, single women, people that are moving into different stages of their life. You know, people move through these different areas. Fortunately, unfortunately, you know, some of us have. I'm sure nobody's going to admit that their credit score has ever been anything but perfect. But so that's what that's about. That gives you kind of an idea. If you need to refinance,
All of it.
it's the only one here who's ever had any problem. Okay, so if you want to purchase a property or refinance, you know somebody that would like to, that is something that you can even help them a little bit, even if they don't work with us. You can even help them a little bit if they say, yeah, well, I'm getting this, 12% rate, and but you know their score is good, and they're putting, you know, a lot of money down, or they've had no mortgage rates, and like, well, you know what? It's just like a red flag. You know what? You might want to consider looking somewhere else or checking out other programs. That's the lending side to it, okay? So in this side of hard money, where does this money come from? So let me ask you guys, has anybody here done trust deed investing? Is anybody, okay, awesome. What generally have you done? You don't have to give all the details.
Oh,
but
how much time do you have?
basically, you've lent money on what, why don't you tell us? Purchase, refinance?
Well, I'm just here to listen today, really.
All right, so you've had experience. Has anybody thought about trust deed investing? What is trust deed investing? Okay, so what is trust deed investing? Trust deed investing is to fund somebody else's loan, or to buy a note, where somebody else has already financed something, and then you sell the note. So why would you want to do that? I mean, what's the point of it? Well, I started doing private money loans. We bank a lot of our loans, the vast majority of the loans. And we were doing the A paper or the conventional side, and we were banking those loans. And then I started to see a lot of loans that fell outside the box. So I couldn't help people because their credit score was too bad or whatever. So I started packaging up these loans, and I would find investors that wanted to do these loans, put them together, put them in the best light that I could, ship them off to the investor, and then what I would see is that some of these deals seem pretty good still. It's like 50% loan to value and 10%, and that seems like a really good return compared to what I'm getting in my savings account. It just seemed like a really good, I don't know, it just seemed like a really good deal. So I started looking at this and thinking, well, might be interesting to take a better look. So I did. I started looking into this. It is something that you can do. And everybody, when they're outside of their comfort zone, they haven't done something like this before, they're like, well, I don't know how to do that, how would I even get involved in that? And it's not hard. There are basically 7 essential steps. Oh, I forgot to take my clicker.
There you go.
There's 7, I'm going to push it the one way. 50-50 chance.
Got it pointed over here at this.
Oh,
There you go.
there we go. All right, maybe I can do this one. No?
Here you go. Let me try this. Just make sure it's working.
Thank you, save me, Dan, thank you.
Okay.
It's okay if it doesn't work.
Well,
I'm
it's got to do
prepared.
something here.
So, see if Dan can catch up. All right, so there are, according to the California Bureau of Real Estate, okay, now which button do I push?
Forward, backward, forward, backward.
Sure?
But you have to put it this way here.
Okay. Thank you, my friend, appreciate it. There are 7 essential elements of trust deed investing. So, knowledge, experience, integrity of the mortgage loan broker through whom the transaction may be made or arranged. Work with somebody licensed. Work with somebody experienced. Licensed, yes, of course I am. Experience, yeah, despite my young age, I've had 20 years of experience. And A+ rating on Better Business Bureau. I know to tell you, you've probably done 50 to 100 loans a month for about 15 years. That is a lot. I'm not sure how many that is. So that's one of the essential elements, and again, this is from the Bureau of Real Estate, that what they are saying is essential for trust deed investing. So they have the whole 20-page document that outlines all this information. And if you go to my website, there's a place where you can request a copy of the whole 27 pages. So even if you, and it comes automatically to you, so you don't even have to deal with a person or me if you want that. It's great stuff. Market value and equity of the property and security for your loan. So is this essential element of a trustee investment? Yes, an appraisal. It's really important. I don't know where I got my notes. So an appraisal, what is an appraisal? Everybody knows an appraisal. It's value, right? Well, value is kind of a little subjective because it's what somebody is wanting or valuing to them. So to one person it may not be as valuable to another person, or one story for one person, maybe they prefer that. So what's an appraisal? An appraisal is something that is based on most recent sales and most similar sales. So if you have a property that sold next door yesterday, same type of property, that's going to be a really good indication of value. Is that the indication of value? No, but it's a pretty good indication. So that's the kind of thing that you would need to know, the market value. Also, when you are doing your trustee investing, you'll also, what other tools will you use? You'll look at an appraisal, like we just discussed. What else will you look at? Anyone other than the appraisal? What would you look at to assess the risk or value of this property? Document? Anyone? That's part of your appraisal, and that is number one. But your preliminary title report, super duper important. It will tell you what? Who owns the property? Are there liens? Is the guy that you think you're buying the note from, is that even the guy? Who's this other person? What's this lien? Really important. So that tells you everything about the title of the property. Borrower's financial standing and credit worthiness. What does that mean? Well, just, do they have income? Do they have a job? Are they self-employed? If they're self-employed, are they winning or are they losing? There's a lot of documentation that you can get when you work with a mortgage broker. For example, 4506 is something that will, is a document that we can request tax returns from the IRS. That's awesome. That's something that a mortgage broker will help you with. Verification of deposits, which is a form we'll send it to the bank. We'll get the verification of the deposit. So there's a lot of documentation that we can get if you want to invest in a trustee that will help you make that decision. Okay, so that is an essential element of trustee investing, assessing the borrower. And some of it's common sense, and some of it is just knowing the tools that are available to you. Escrow. Why do you need escrow anyway? You know, they're just annoying. Well, they will take all the different conditions of the loan and reconcile money for deed or documents, and they're an independent third party, of course, everybody knows, but it's really important that things go at the right time. You know, you sign your note and deed, and then the money has to be transferred, so you just have to make sure all that happens at the right time. Escrow is really important. Documents and instructions describing the evidence in securing the loan. So, obviously, you're going to have the documents that you need, you're going to have the note, the deed. There are many people that are private investors that just lend money, you know. Oh, I lent my grandson for his home purchase, and what, you know, where are the loan documents? Well, you know, I mean, like, just like a note. You know, there's a lot of documents that when you work with a mortgage broker, company, that will protect you. This is a really essential element of trustee investing. So if you're going to purchase a note, or you're going to be the lender and you're going to want to do that on a private basis, you want to work with a mortgage broker or a company that can really do that well. And you think, well, a deed is a deed, a note is a note. I've seen deeds 20 pages and I've seen deeds 40 pages. And actually the 40-page one isn't necessarily better. So that's something essential that is just important. Loan servicing provision. Not a big issue, usually. When it's good, and you have no problem. Borrower investment, no problem, all of a sudden they don't. Crap. So what do? If you're sitting there taking the payments every month, and then you have a problem, well, now there's certain requirements. You need to give a notification and timing, and if there's a problem, what kind of information do you have to convey? So it used to be that, you just do servicing yourself, just spreadsheet with Excel, put the numbers. It's probably better. An essential part is to get the right servicer, get help with that. So that's important. Recovering your investment when the borrower fails to pay. This should be if. But if there's a reason that the borrower doesn't pay, what do? Panic, number one. Then when you're done panicking, you realize that it's not terrible. There's judicial and non-judicial foreclosure. What does that mean? It's like all these big words I can't even pronounce. Either you sue the guy or you let the trustee go after it and start a foreclosure process. Well, oh my God, how much does that cost? Well, it's not even that much. And many companies that will start that process for you. So if you did trustee investing and you had an issue, it really isn't the end of the world. If you manage your stuff, if you stay on top of it, you're dealing with a good servicer, you're going to get help with that. If you've got enough protected equity, you're going to be okay. So that's pretty important when you're considering investing. Bottom line is that what we're doing, and a lot of other companies can do, but what we do and what I think sets us apart is we've got the loans from conventional to the hard money and everything in between, and we can fit the right program to the right borrower. And if you're comfortable with all that, and you guys are in this real estate club and you're part of all this and you're starting to get comfortable, you guys are already the 1% of the population that's already kind of getting comfortable with it. And if you feel like you want to invest, trustee investing is something to look at. And if you want more information, if you go to this website, there's a place you can put in your phone, you get all that information. And if you have any questions, just call me anytime. Thanks.
Okay, Noelle, thank you very much. Now, you're down in La Jolla? Is that where you are?
Mission Behavioral.
Mission Behavioral, that's
Yeah,
right.
but we're throughout California, Colorado, Oregon, Washington.
Good, okay, excellent.
Thank you.
Thank you so much. I really do appreciate you being here and offering all that information. You'll have a chance to get back and talk with her some more. I'm not real sure when this whole thing's over, if they're going to come in here and chase us out because they got another, group that's going to come in the room, which we don't have to worry about at night, but we do at this hour. What we're going to do is we're going to take a quick little break and get some more wine if there's any food left, and I'm going to get Crystal set up. Are you going to be using the computer for PowerPoint? You do need that, okay, good. And then we'll get you all back at the seat and we'll go on with Crystal, okay? And you have a laptop or a